Good morning, everyone. This is Tricia with Easy Emini Trade, and I want to go over the trades taken on Monday the 8th and Tuesday the 9th. And if you'd like more information on the setups, you can go to www.easyemintrade.com. So here is Monday, and you're looking at the NQ, and it was a perfect day for range trades if you don't mind trading range trades. And you can see just how sideways the market was. You can see it on a 3,000 tick chart, 15-minute chart, 30-minute chart, whatever chart you look at, you'll be able to see that it was just sideways. So we start out, obviously we don't know that we're going to be going sideways yet. So we get closed outside the channel here. Our indicator is not in line to take it, so we pass. So nothing to do, nothing to do. We trade down to support, trade higher back up to the resistance area, and then we come back down to support. So if you are willing to take range trades earlier in the morning, because I consider 10 o'clock a little early for me to be interested in taking a range trade, because quite frankly, at that point, in my opinion, we really don't know that we're in a range yet. But nonetheless, many will take it, and so the way that you do it, you're at support, you touch the channel. The way that I do it is I like my stochastic to be rolling over from 20. So I'm a little more conservative with it. You take it expecting only to get up to the upper channel. And range trades work best when you're taking them in an area of support and resistance, not just because it's hitting the upper channel or lower channel. So we get back up to the resistance area and rolls over, you take it expecting to get down to the lower channel and support. Same thing higher. Gets to support, back inside the channel, heading higher from 20, you take it expecting to get up to the upper channel. And you could have done it here as well. Takes a little while longer. I passed on this one because it broke the area of resistance above me. So you could have waited, instead of taking it right here, you could have waited until you saw the divergence forming, where you have price going sideways and a lower low, a lower high on your indicator. You could have taken it. It worked out. It took forever to go, but it did finally work out. And then if you're willing to do these during lunch, you can certainly take them. You come back down to support, and you have divergence to the upside, so that gives you a little more confidence in taking it, expecting it to go back to the upper channel. Now, I do want to point out that the less volatile price is, the more narrow the channel is going to get. So at some point, you're going to want to stop taking them because the channel is just too narrow to make it worth your while. So again, that's just my opinion. Keep in mind, you don't want to be shooting for a half a point on the NQ. After commission, you're not going to wind up with very much. So I would obviously just consider that when you're taking those. And I'm going to show you the ES really quickly. Here is the 5100 tick chart on the ES for Monday. Here's the open. And you could have done the same thing there. It would have been a little more difficult when you look at it on a 1-minute chart, because you continually were having lower highs. And so you could have just taken the shorts if you wanted to. Totally up to you, but the range was getting a lot narrower on the ES a lot sooner than it was on the NQ. So I just wanted to point that out. And so pretty much that's how the day was. Not much to do except for range trades, in my opinion. This was very late in the day. Just about 4 o'clock, so not something that I would be interested in, but many probably were, but not something I'd be interested in. And this is Tuesday. Let me make this a little bigger here. And typically we're willing to take a trade off the open as long as it's within that first 3 minutes, and we will be willing to ignore all areas of support and resistance. Now, with that said, sometimes I do use some discretion, and we get our bar close outside the channel, basically our opening bar. And what I'm thinking is, here's our opening bar on the 3,000 tick chart. I was not willing to take it, and the reason is we had created such support on Monday that I just wasn't convinced that we could easily get through it. I was going to wait to get through it and then take the entry. Obviously, you can see that if you took it, it worked out very nicely. and that's just the way it is sometimes. I have no problem letting trades pass if if I have a good reason for not taking it. And so there are often times when we pass on something first thing in the morning and we're happy we did. So in this instance, obviously I was not happy I did, but nothing I could do about it. So then at that point, what I'm waiting for is I'm waiting to get above the resistance area created here from the close of the previous day, and floor trader pivot point right above me. So we get that, and you'll notice that we have at that point created a lot of distance between us and the channel. So what I'm waiting for is I'm waiting for price to go sideways a little bit and just get a little closer to the channel. So we enter in above the high of this bar, knowing that the high of the previous day is right there above us. And you can see that it continued higher, and depending on how you managed it, you could have realistically gotten in the first trade in the morning and not ever been stopped out until 11 o'clock. I wish I could say that's how I managed it, but I'd like to take something off the table and move my stop to my entry. So I wound up with 3 different entries yesterday, and I got in here, which was 938. Basically filled at 9:39. I got in here, set up at 10:15, filled at 10:16, and then we took a trade at 10:41, filled at 10:42. And you could see that the market went straight up yesterday, and had you been using a different management style just by trailing and not ever moving your stop to your entry until it continued a little bit higher, you could have, like I said, been in the same trade the entire day. So, great for that type of management. I wish I could say that I managed it that way, but I didn't. And then later in the day, you could have taken a couple trades during lunch if you were trading. I was not, so I'm not even going to discuss it really. But you can see where you could have taken it. You could have taken it here, and you could have also taken it in one other spot. But what I wanted to show you was, so later in the afternoon, obviously we're going a little sideways, and we had a huge run up in the morning. So waiting to decide what, waiting for price to either roll over or go higher, and would have been willing to do either. But what I had decided was that if we could, I mean, obviously we're in an uptrend. You know that I typically don't go counter trend unless I'm taking a trend line break. And so this was basically the line in the sand from where I was willing to go short. I had said, let me just make this a little fatter so you can see it a little better. If we get closed below this area, I'd be willing to take a short. So that translates into breaking some resistance area and support that was created in that area. So once we got a close below it, we took it, indicator in line to take it, get closed under that area, and pretty much it dies. So very happy with that trade, and basically it got down to the high of the previous day again. So I just wanted to point that out. And that's usually the only time I'm willing to go counter trade at this moment in time anyway, working on a couple things to maybe take a few of those every now and then. But for now, that's how I will do it. So I hope that helps, and you can go to the site and check out the information.